Good evening, ladies and gentlemen. Welcome back to another Stocks to Buy Sunday night special here as we dive and delve deep into the insanity that has happened over the last week, which honestly, I love it because I can throw shit back in people's faces. I had just been watching a few people. I don't know if you guys watch Dumb Money. I was kind of on their live stream and watching Chris shit on Google. Ugh, it hurt me to only have earnings come out that night and the stock pop 10 beautiful percent. Muy bien. I mean, the whole market is sitting back in a place here where I'd like to say we should be in a higher correctional period because things are kind of expensive. Like they're expensive here, right? But when people start, like these rich people, these influencers start crapping out that, hey, I'm stacking cash. I'm scared. I got too much money. I'm too rich. I'm too worried. I'm going to put all my money around and just wait and see what happens. And then the stock market just explodes. Makes me feel good. It reminds me that nobody knows what the F they're doing. That's why I got in this business, because it's an even playing field. Don't matter whether you're Kevin O'Leary or Warren Buffett, you have the same freaking problem. And if you just do some due diligence, if you're just a hustler, if you just cost average in the market, you tend to do conceptually well. So taking a look at my portfolio here, I've done a lot this week and I have not updated this spreadsheet at all. So these numbers are highly inaccurate, all things considered here, but we're kind of back to the gains we were before, because it's kind of this ebb and flow and kind of give and take with how much Tesla's kind of been beating me up up till this recent pop, of course. But I mean, I'm always kind of just sitting in this place where, like, I don't know why people just don't have a perfect formula for investing. It's easy. There's nothing hard about it. I've always told you guys, keep a percentage of your wealth in cash and keep a percentage of that cash for an emergency fund if the market drops 10%. It's not rocket science. And then just keep buying. Buy the highs, buy the lows, and just wait. And when we get a pandemic-like event, you got some extra cash, you can double up your cost averaging for a few months. That's the whole point of having kind of a stock market emergency fund. I always laugh when these fools come out and they're like, I'm no longer buying stocks. I'm shorting Tesla. I'm doing this. And I mean, oh God, it's just raw stupidity and I love it. Well, Meet Kevin is bullish on Tesla again. Yes, I saw the flip flopper. I catch bits and pieces of his content, but I guess, when you've been around the block long enough, you kind of get bored of people. I'm sure people get bored of my content and my repetitive blah, 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 all the time as well. But like, I just feel like Meet Kevin is such a sales rep as much as I am. So I recognize it. So when I see him promoting trading stocks and showing gains that he's making and options and this and that, and then he's always trying to word it so it sounds good, so you'll sign up to his thing, even though it's the dumbest thing on the planet you can do. I'm not a day trader. I know very few that have successfully done it over long periods of time. And I actually, when I started YouTube, before I started YouTube, I think years ago, I started following day traders when I initially started day trading back in like 2014, before I realized that wasn't the method for me. And those guys that I watched, they all quit YouTube. One of them actually went back to doing truck driving, even though his whole YouTube channel was about quit your job and start investing and, doing day trading. And I just don't get it. There's just like such a sound and tried and true model that has always worked. That is like, I've done it almost for over 8 years now, and I've made a lot of money. It just works. Even if you're buying individual stocks, just buy really high name brand quality crap and hold on to it. If you want higher returns, you're going to have to deal with higher volatility, which, sometimes you can just get from an ETF. It's kind of hard for me because as somebody that works in the stock market, I like buying individual stocks. I always have. Probably always will. Not something everybody should be doing, but I'm sure if you're watching this channel, it's not like the end of the world for you to be kind of going down this path. But let's take a look at the markets and talk about these stocks themselves, because holy hell. What a week. I got to say, this was a week that was like the rude wake-up call that nobody knows what the F they're doing, and it was beautiful. You got Google up 11%. Sorry, I was just sneezing. My nose is a bit runny here, but Google's up 11.5%. Tesla's up 14.4% on the worst earnings imaginable. Microsoft was mostly flat this week, and we got a lot of earnings still coming up that I think are going to be the final dictators to where the market goes. And I think, honestly, the market should probably go higher to some extent. And I can only say that because if we're comfortable trading in like this 30 times price to earnings multiple, which I know sounds nuts for like the S&P 500 and a lot of people being like the higher 20s and the 30s just seems insane. But when you take a look at some of these numbers, like, you got to admit that, like, if you can consistently keep this up, paying a 25, 30 times multiple is probably not the end of the world. I mean, when Google's seeing revenue growth, 15%, operating income and margins increasing by 7% to 32%. I mean, look at their net income here. I mean, their net income was just, it was insane. I mean, it was like literally just absolutely insane. The earnings per share went from $1.17 to $1.89. Now, for some reason, Macro Trends hasn't been updating this. And these companies are doing a few things, right? Like, they're seeing a return in revenue during a period where they've obviously had operational efficiency and they've refined the business. They laid people off. A lot of companies been doing this, but you got this period now of revenue growth and these companies with more cash than they know what to do with. And everyone's like, oh, they should be reinvesting the cash and building the business. And why are they doing dividends? It's like they're doing dividends because we love dividends. A great company should be able to pay a dividend, buy their shares back, and invest in the company. Google makes so much effing money. Like, to be able to do that is not a big deal. Like, I don't know why people always complain about it. So it's nice. I think they're doing the right thing by doing the dividend. It's bringing in more shareholder value. It's obviously pumping the stock. It's a great thing. I mean, you look at this, we're finally returning to a place of normal revenue. And, the last quarter, because this is only showing for the December end, was 13%. And again, if we go kind of back in and I just take a look, so I mean, their change in revenue year over year was 15% for that last quarter. So they're getting back into the mid-teens, right? This is a beautiful place to be trending for the first quarter of all quarters. I mean, the Christmas quarter is usually the best. Q1 to be this strong, whoo, baby, no complaints, right? So you take a look at something like Meta, which is hilarious because I think maybe Meta was just a little overbought. I don't know. Guidance is still pretty strong. The stock shouldn't have dropped as much as it did, but that's the reality of the markets. It's Fugazi in the short term. No one knows what the F's going on. That's why it's beautiful. You got net income up 117 goddamn percent. That is a wild amount of growth for a S&P top 10 company, a multi-trillion, like a trillion. Is this company better in the trillion? Like, how am I going to check the market cap here? But look at revenue growth here. I mean, revenue growth, this is kind of a bit more nominal for them. I'm sorry, the top revenue line. I'm looking at the wrong revenue line here, 27%. Like, these numbers are absolutely bonkers. Let's take a look at Meta here, because Meta has been trucking, and for some reason, Macro Trends has upgraded clearly their Q1 numbers here. But look at this chart, man. This really just shows you that, like, advertising hasn't peaked. When people shit on Google and Meta, like, I just think to myself, I'm like, how do you disrupt these businesses? Like, I think almost 1 in 2 people globally are using Google, like a form of a Google product to some extent, whether it's Android, Gmail. I mean, Google's just everywhere. Meta's in the same boat. Like, Meta, WhatsApp, like, there's so many products. I think between Google and Meta, like, more than around half the world is using one of their products. They're just absolutely absurd conglomerates that just haven't peaked market maturity yet. A company at this scale shouldn't be able to grow at a 27% revenue growth rate. Like, how insane this is? It really just shows you that, like, marketing is still kind of nuanced in a sense that, yeah, we might get ChatGPT. Apple might release a product where you can start asking it things, and maybe we start going down that path. But I just feel like Google's got a runway left. It's not over. Look at something like Microsoft here. Microsoft's starting to peter out a little bit, I've noticed. The revenue growth, again, at this scale is still unimaginable. When you're talking a double-digit growth on a company generating $50 billion, it's kind of disgusting. Like, come on. I mean, it's kind of ridiculous to get 17% year-over-year growth. You can't kind of expect that to continue. But I mean, you look at this business, like, again, you go back and, like I said, the sweetest period that ever existed was basically from 2010 to 2012 to 2020. And we are starting to return back to where we were in those 20-teen periods. So I don't know how these companies can function like this. I don't know if this is just part of this weird technological jump that's happening, but you have to recognize that this is just, it's insane. And it really shows that we're not in a recessionary environment, because if we were, companies that advertise shouldn't be spending more money on ad dollars. I don't think ads are converting as well as they used to, but you would never see this kind of ad spend and this kind of return in a recessionary like market. However, depends on what companies you're looking at, right? Because clearly it's a secular kind of recession we're experiencing, because you talk about something like Tesla, right? And this is a whole different story here. I love Tesla just because of, like, it's just such a weird fixation people have on this company, and I love how it gets the spotlight and just gets overblown to every, like, pillar of like bipolarness. Like, either love it or you hate it, but you got to recognize that these numbers are truly garbage. I'm like, these numbers are bad. I mean, you're talking about, again, revenue that was down 13% on automotive, right? Overall revenue down 9%, total gross profit down 18%, operational expenses, kind of trickling up a little bit there, 37%. And then you just kind of take a look at this and you're starting to see this kind of inflectionary period, which is the ebb and flow of a growing business for sure. Every kind of company's gone through this. But what I really want people to pay attention to, and outside of Tesla, like, let's just say we go back to Google here, for example, what you really want to pay attention to is you're getting this beautiful revenue growth, but you really want to look at that net income, right? This is where things are just fascinating to me, because this is the recovery that we're currently experiencing. Same with, like, EPS growth. this is what the stock tends to follow, and this is kind of what we're playing in. And this isn't always a reality, as we kind of like, let's compare it to Meta real quick here. If we take a look at Meta's earnings per share growth, because you can see, as we mentioned, like this operational efficiency period where these companies were spending ungodly amounts of money in a period where people just wanted growth, they wanted investments, they didn't care about earnings. And then we kind of came back to this market where earnings were the only thing that mattered. But I feel like we're starting to hit equilibrium, right? Because Tesla, for a company to post such garbage earnings, for the stock to start rallying, is kind of, showing a tail sign that, hey, we've kind of recognized that these kind of companies are forward looking, and the market's willing to digest and accept the fact that there's going to be a bottoming out on these stock prices at some point soon, because so many of us are still willing to hold it, even though the fundamentals are deteriorating, because we believe the business in the future is probably going to be well. That's hearsay. That's anybody's opinion. Who the hell really knows what ends up happening? But if we take a look at Tesla's net income, because this is where things get kind of horrifying. I mean, we're talking about a pure deterioration, right? I mean, like, this isn't exactly what you want to see on the trailing 12 month. It's not like the worst thing in the world, but there's the fact that it's deteriorating, right? So I'm curious to see what happens here. I feel like Tesla's at this point now where they have to make something work. And I think in the next year or two, like, it's a defining factor for the company that comes with exuberated risk being a shareholder, which is why it's not like a huge percentage of my portfolio. It's one of the only 2 individual stocks outside of some small caps that I hold, obviously. But I'm willing to take that risk, right? I honestly think there's going to be some real potential to some extent, but time will tell if self-driving starts to really kind of play its wheel. We'll see what happens. I'm not going to be flip-flopping around like me, Kevin was. I took my money out a long time ago, and I'm only just getting back in. So fingers crossed it works out as much as Google has, because Google is a savior. I mean, it really rebounded my portfolio into the green pretty dramatically, which was cool. Not that that's going to continue. We'll find out very soon here. But taking a look at the path forward, right? And we're going to talk about the path forward for stocks, and then the path forward for like what I'm doing with my portfolio, and just kind of gauging out the insanity that's about to ensue next week, which will probably be the ending de facto to where the market goes. Because what we have coming up that I think is the most pivotal, a lot of people are going to be talking about SoFi. You got a lot of kind of just traditional companies in here from the S&P lower half, like McDonald's, 3M. 3M's kind of been dead in the water for a while. I think it's only up 20% off its lows after dropping like a crazy 50-something+% or more. But you got PayPal. Like, these companies are really popular right now amongst the dividend and, kind of the growth-based communities. I don't really care for these companies as much. McDonald's more of a retirement company. It's done exceptionally well. I've always debated on re-adding it on an individual basis, just never did it. PayPal, on the other hand, is a stock I don't care about at all. I don't know why people got so caught up in it. I get that it's tanked, it's dropped, it's been kind of this gutter where there's some recovery period, but that's all you're kind of playing it for, as a swing trade at best. Because long term, there's just too much competition for a company like PayPal. I don't know how people are just so excited about it. It's like, what's PayPal's moat? I hate them relentlessly. I try and avoid using them at all costs. They just do everything they can to refine and dine and steal your money when it comes to conversions and all this crazy crap I've talked about relentlessly in the past. You got Apple Pay. Everybody and their grandmother has a Cash App now. It's like, it's not something that is nuanced, right? It's a big company. It's a matured company, in my opinion, and it's just trying to find that next growth phase. But what's fascinating to me, and what I'm going to be focusing on the most, and what most people should be paying attention to, is Amazon, baby. Amazon is a real fascinating stock. I mean, of all companies out there, I think Amazon is a defining factor to not only what probably a recession would look like, but probably a defining factor to this ever-evolving economy as we move away from traditional brick and mortar into e-commerce. And e-commerce affects every company, every business eventually. It doesn't matter what you're in, whether you're even in like a salon type business, you're going to be using e-commerce to start attracting new customers. Even if you're brick and mortar, you have to start adjusting to e-commerce. I mean, again, it's the future, right? I mean, it's the way everything's going to some extent. I mean, heck, even at this point, like Uber Eats and all these companies are helping brick and mortar businesses start refining into the digital era, even if you can't purely sell online based goods. But even if you are holding brick and mortar, this is the world you need to start moving toward, right? I mean, you take a look at the growth here. And again, this company has never seen negative revenue growth in its last, 14, 15-year period. There's no business on the planet that looks like this. But again, you have to understand that Amazon is a business that doesn't actually capitalize on this revenue. And what I mean by that is that this is client revenue, right? And I've told you guys this. Everyone looks at this and says, like, why are their margins are garbage, right? Like, if we take a look at their net income and stuff, people trying to figure out like how a company generates so much revenue but has such low net income and comparable, right? If you take a look at like earnings per share here, it's been a bit dodgy. And you take a look at 30 cents, whatever, but you don't see a whole lot of growth here up till pretty much recently. And this is more to do with AWS, like their cloud computing stuff. And that's because, again, the revenue is your money. It's like, it really just represents like, it's like a bank. When you look at the assets of a bank, the assets of a bank aren't the bank's assets. That's why when you look at a bank's assets versus their liabilities, a bank typically has the exact same amount of liabilities as they do assets, because their assets is my money. It's not the bank's money. It's considered an asset and a liability. And I almost look at that as the revenue of Amazon, because this is literal client exchange capital. It's like if I buy something on Amazon, it goes into Amazon's wallet before the e-commerce person gets paid out. And that's part of their revenue, right? I mean, that comes in through Amazon revenue. So when you're looking at a company generating $574 billion, Amazon's not doing that selling their own products. That's not a product of Amazon that is generating that revenue. It is just the transactional system that is the e-commerce of Amazon's online business, right? It's really neat to think about it, but what makes Amazon also most intriguing is the fact that it is the infrastructure and the backbone now of the entire economy. I think Amazon is a true monopoly, and it is a beautiful piece of like evolution that is just disrupting all these, postal services and all this stuff. And I just can't get over it. Like, I'm in awe of it. It's a company that I've debated on buying a couple times. I don't really care for it as an individual stock because I have a hard time like running my head around the value, because the only value this company has is the fact that they own the rails. They are like the entire rail system behind the future of commerce, essentially. I mean, Shopify tried to compete with them and they failed. I mean, nobody's really coming after them. They've done something that's so damn impossible, like FedEx and traditional shipping companies couldn't even do it as successfully, because they've been building warehouses like there's no tomorrow in every backyard hidden somewhere. They can just do next day deliveries. It's ridiculous. Is there any affordable AI stocks available? Well, I mean, Google's a great AI stock. Everybody's an AI stock. This is the dumb thing. It's funny because like, I think when we're talking about large language model businesses, it's a different story. But typically, like, you even playing a Nintendo 64 game back in the day had AI in it. Like, there's algorithms that are just, artificially intelligent. It's not like it's AI. It's just a ridiculous tag that's gone out of control, I think. But if you're looking for like highly specific AI that's valued, I mean, again, like the only place I think you can go where you're going to get like potential upside without a lot of risk is these mega cap companies. I wouldn't buy, again, chip stocks. We can talk about chip stocks. They scare the hell out of me for a variety of reasons. At this stage of the game, I'd rather own the companies that have the software control, because that software control, yeah, you're going to need the pick and the miners from NVIDIA and whatever. But once you've got that system in place, that self-driving software, once you get Adobe and like editing software and all this in play, the value of having that residual income from a subscription is going to be far greater than a one-off payment to building the infrastructure required, right? So I mean, look at NVIDIA as a company that'll capitalize today and for the foreseeable future for the time being, but they'll hit a brick wall eventually. Whereas, if this software is as good as the initial launch of Google was and YouTube was, like, I mean, you're going to get 10, 20, maybe 30 plus years out of a business that will just print ungodly awful amounts of money. So I think one of the companies that I am super, super excited for is going to be Apple, which I think is probably one of the most underrated AI companies right now. You can't help but recognize whatever Apple does in AI is going to be in the hands of hundreds of millions of people. There's no getting around the fact that Apple is going to control pretty much the entirety of what AI becomes. And I think people have to like really recognize that like Apple has just been getting shit on relentlessly, and it's deserved. And I've shat on them because, I mean, look at this. Like, they're slashing their Vision Pro headset production, and they canceled update headsets as sales tank in the US. And what really pissed me off too, because a guy that's been using VR now for over 2 years, 4 days a week at least, and I'm not even joking, like I use VR religiously. I think it's the future. I love it. It's fun. It's such a fun way to interact with friends and just people in general. And it gets me exercise, and it just does so much for me on a level that fulfills me. and when Apple come out with a product where even Casey Neistat and these massive YouTubers were saying, oh, what Meta makes is just a toy. This is like real hardware. And I'm like, it's not though. It's like a toy or not a toy. I'd rather your product feel like a toy than a real piece of hardware nobody wants to use. because Apple just thought developers would be like, oh, we could develop around this product. It's going to be great. But no, there's no video games. There's nothing cool on it. No one wants to watch TV in VR. I'm sorry. Maybe if you're on an airplane, the one-off use case, you're going to carry around a $4,000 friggin' headset through an airport. And then like, I get it. Sure. If you really want to get into that, but it was such a stupid thing. It had no So when you're making a product, at the end of the day, like you need one practical use case that your end user that's buying it is going to use it for. And you need that end use case to be so valuable that they're going to have to use it. And for Meta, that was video games. Meta knows games are in porn and that's it. Like that is the entirety of VR right now. If you don't have games, yeah, well, I don't know. I haven't even looked to see if you can really watch VR porn on Apple. Maybe that's the only use case they have. Who knows? But they failed at it miserably, okay? So like developers aren't going to care because they don't have controllers. They don't have anything that makes games possible in a realistic way. So it's a huge flop, right? I mean, they're going to have to recover from it. But as we take a look at their revenue, and I'm very excited to see what Q1 looks like for them, because like Tesla, when you have a very expensive lineup of products that people just do not want to replace every year all of a sudden because it's expensive, I mean, you're starting to see that hit, right? Because for the first time in what's been like, this is the first time in a while where they've experienced negative revenue growth for like almost a consecutive year. Like, I mean, they had 4 straight quarters of negative revenue growth. Never in Apple's history, I think going back to even like pretty much just after the .com bubble into 2008, have they experienced like, an entire year of negative revenue growth. Now, Apple, again, being this conglomerate that makes more money than God can imagine, they obviously have been able to sustain earnings per share growth because you cut costs. You obviously you buy shares back, you take some shares off the table. You do everything you can to make the net income look good, right? I mean, this is what they're able to survive these tougher market environments. But Apple's one of these companies where I think you kind of need to start seeing interest rate cuts because Apple's like a company of like, I think the real growth comes from like the future potential of how affordable is the product, right? If I can get the product, I don't know, I should go look and see like, are the phone company, let's just look it up real quick. Like if I were to buy a new phone, say from like Rogers or something, like say iPhone from Rogers, what kind of deals are they giving? Are they giving like a no interest? Like what are the interests on borrowing this kind of stuff right now? I'm kind of curious to see. Because I mean, when it comes to MacBooks and stuff that are for school, like you need loans and stuff for that. And those loans are so pricey right now. I just can't imagine people are buying these products to enhance their businesses like they were. Oh, I'm noticing that the offers that they have obviously don't seem to be, do they have okay, so they've got, iPhone 15. Sorry, I'm not sharing the screen here. Let me pull this up. I'm just looking at the deals they have. So I mean, you get 0 down, but a 15 Pro Max, I guess that's not like the worst thing in the world. 42 a month on financing. What's the financing cost? I wonder. See what these guys, 0 APR, full price. Yeah, I'd be interested. See what these prices are doing here. But yeah, I don't know. We'll see what happens. I'm really curious. If you guys have a telltale or kind of just a finger on the button for Apple, do you think we're going to rebound from here? I'm debating on picking up some shares personally because it's not like the biggest position in our portfolio. And I used to own it. I made so much money. I mean, I wish I held my initial shares because people would laugh at it because when I was buying it, I think around 2014 timeframe, like my yield on cost was like 5% on the dividend, which we're never going to get back. Like to buy Apple today, for God knows, you'd have to hold it for like a lifetime to get those kind of yield on costs again. I don't know. I'm really curious if Apple's peaked. I don't feel like it has. I really don't feel like Apple's kind of had its day yet because I feel like iOS is still getting adopted and a lot of people are starting to in third and second worlds are adopting smartphones. I'm moving all my CAD to USD since Canada is garbage for investing. Yeah, I've always said that like I mean, just take a look at the dollar conversion, right? I mean, if we take a look at one CAD, let's just say like 100 CAD to USD is what today? I mean, on the conversion right now, the dollar's been getting just hit really bad. So I mean, yeah, I mean, look at the last year, right? I mean, from the peak to trough, the Canadian dollar's dropped at like a drop of about 4 to 5%. It looks like it's rallied back just a wee bit here in the last like little few days, but yeah, it's rallied back about 1.1% on the US side. But if you zoom out, man, like CAD, look at this. I mean, look at this chart. Am I sharing this? Make sure you guys can see this. You really have to understand that if you're a foreign investor, holding a country that has a superior dollar like can be the night and day difference between how fast you retire. And this is why I tell you guys, like, I want to hold US dollars and I make money in US dollars because the value is just exponential here in this country. I mean, from the peak to trough of the Canadian dollar here, which I should pull up a more accurate chart, but I mean, this thing's down 30% from 2009. So, I mean, if from 2009 you were investing in the US, you made an extra almost 31% return just in the effing conversion rate. I mean, if you just bought the S&P 500, you would be ungodly extra returns. 30% over that period is nuts. You know, it's a painful reality of investing abroad, but even if you lived in Europe or other countries, like I think you have to understand the prevalence of buying countries where there's a superior growth rate and a superior amount of tension in dollars. Like, I mean, at any point in time, I guess the US dollar could use superiority, and then you'd have to kind of reconstitute like what countries are growing and having more superior products. But for now, it's the US, and it probably will be for quite some time. So, you know, it hurts. It's painful, but it's a reality you got to live with, unfortunately, right? But taking a look too, right? I mean, it's not always like that gleamy. You really have to be careful what you're buying, because just because the economy and the dollar is doing well, I mean, I'm looking at things like the Schwab US Dividend Equity ETF, and I don't think I need to be investing in dividend stocks right now at my age. Like I could wait a little bit longer, but I've been trying to build this position out, and this stock has been doing nothing for a while, right? But like I'm going to keep cost averaging into it. I'll keep it as a primary aspect of the portfolio because I'm not looking to retire by the time I'm 50 or 60. So I am still like trying to average out like how much I want in the S&P. And obviously I'm going to be buying dividend stocks because eventually in the next 5 or 10 years, I'm going to be drawing on these dividends sooner rather than later. So I need to start building these positions out today. But I'm having that like constant conflict in my brain of like, I know that I could just buy growth companies and not worry about it for a while, but I just, you know, it's weird when you're trying to play that game of fast tracking things, because I don't believe in the world of dividend stocks as much as I used to, like until you're at that stage of retirement. Because I'm watching people like PPCEN, which, you know, you guys probably watch PPCEN. I've kind of lost faith in these kind of investors. I like them still. I get where they're coming from, but like, man, when I listen to them go on about how like you don't have to worry about growth stocks or when you're selling or this or that, and you just buy them and you collect dividends, and then you don't care because the only thing you care about is the dividend growth. But the problem is a lot of these people are just reinvesting their dividends, and it hurts me inside because I'm like, if you're doing this outside of a tax advantaged account, which in the US it's like you don't really get the same tax advantage as you do here in Canada, but like if you are buying it in a regular account, the company is paying tax on the net income. They're putting that in your pocket, and then you're paying tax on it, and then you're buying the stock back. it's like I would rather the company just pay me a lot less and just buy shares back. I mean, that's why Google and Apple and these beautiful companies have gotten to the level they've gotten to, and I'd rather have exposure to that over a 10-year period than exposure to other companies where they're more fixated on paying out dividends. It's just a sad reality that I think some people have to like justify in their head for some reason. But I feel like dividend investors, if they're purely, and PPC is pretty much at the stage of retirement, he's already using his dividends. I get it. But I feel like he sucks people like me in at an early age of investing, and it detriments a long-term portfolio. So you got to be a little careful here. Junk meat grows a spine and does not support this terrible budget. Who are we talking about here? The only problem is it's 17 months away. Oh my God, I got to scroll up, man. You guys are getting into a conversation I've been missing out on. We'll read through these, and then I want to finish up with some other stuff that you guys have been asking about that are AI related. There's some crazy AI videos I've been watching I want to share with you guys here. The reports the CAD could go below 60 cents. I do believe that. Honestly, if I can bet on the next election cycle, this is the only election in the world I wanted to make bets on. I have never seen somebody so hated in the Canadian political environment than that is of Justin Trudeau. Like I said, I am the most, you know, just I don't care about politics. I honestly like, because when I got into investing early on, I just felt like, you know, I could never rely on the government to get rich. If I was going to get rich, I'd have to look outside of the country and just expand my consciousness into understanding the global economic system a lot better. And the fact that I have the luxury in this first world to put money in other countries, and like, even like, I love my corporation. It allows me to invest in Hong Kong dollars and European dollars. I can invest in any currency in any country I want. I feel blessed. But, you know, I don't care. I'm agnostic to the insanity of politics, because I feel at the end of the day, they have a lot less control, and they make promises they'll never deliver on and all that crap. But you have to recognize that Trudeau is the most hated politician, I think, even on a global level. In the US, people talk shit about this guy. I don't even think if you went back years ago and said, hey, you know who Stephen Harper is? No one in the US even knew who Canadian politicians were until this guy stepped in. And they loved him. He was gorgeous. He legalized marijuana. He made me a lot of money, because I knew that day was coming. And that was like an initial bet on the political landscape. I'm like, this guy's going to legalize it. I'm putting some money in the MJ market. That was great. It was good old days. But now we're sitting in a new world where carbon tax is ruining inflation. This guy's printing ungodly amounts of insanity. And I don't know what it is. It's just funny. It's just dumb. And I want to bet on it because, you look at any video, anybody that talks even remotely nicely about this guy gets chewed in every comment section. And people that I knew voted for him, that loved him, think the economy is going in the toilet now. And there's just no way they're voting for this. So I'm excited. I'll be, like I said, I'll be voting and gambling at the same time. I don't even like to gamble, but I got to gamble on this because I've never felt like such a sure thing is coming around the corner. So we'll see how it goes. Do you prefer VDY or just buy the stocks, write covered calls against them? I don't know if you're talking to me or some other people here. I would honestly highly consider just buy SPY, or I think SPY is better for covered calls, but I would just buy broad-based ETFs and write covered calls to generate cash flow, even with the Qs if you wanted to. It's just a much more stable way to generate cash flow off lower paying yielding ETFs if you want stability and income. I don't buy individual stocks as much on the Canadian side of the market. We do have some things like TELUS and whatever, but even though that stock's getting wrecked, but we're obviously US focused, right? I believe wholeheartedly the real returns come from the States. If you want cash flow like my parents and you're in retirement, I mean, yeah, invest in Canada. If Apple doesn't own the AI, Apple will get owned. I don't think they will. I don't think, like you said, Apple is just a product that is part of our daily lives. They are still dominating globally, like the phone market, and whatever product they come up with, you're going to be forced to use. And something tells me they probably already have the product in works, and it'll be the next generation iPhone or whatever, where there's no longer plugs anymore. Everything's wireless. The thing talks to you. Like, that's the world we're going to. And unfortunately, like, the metaverse isn't taking over that anytime soon. And I haven't seen one product that even dares to like disrupt the iPhone. The iPhone will be a product of our generation that will be sucking dollars from us for perpetuity until we're probably dead. I just don't see something replacing it yet. I don't know what it will be. It's hard to imagine what could replace the iPhone. It's just such a tactile thing. But maybe if the form factor gets down to glasses, maybe, I don't know. We'll see. I still have a hard time believing that. We'll find out soon enough, right? But yeah, this is what I believe is the big deal, right? Like, I think one of the most insane partnerships that ever happened was that Apple was so scared that if they tried to compete with Google on search, that people would just start downloading the Google app and not use their product, and Apple would lose out on billions of dollars. So instead, them trying to be smart about it was like, look, we can't compete with this global brand that is Google. So let's just partner with them and have them pay us a royalty to be the top search de facto on the iPhone, right? And that was the best thing they did. Now they're looking to use Google for their cloud, computing and their Gemini project, and obviously their AI features, because I think Google's a leader in AI, and Apple is obviously going to work with the partners they have. Do you know anything about Palantir? Yes. People hate me because I am not a fan of Palantir, and I will show you why I'm not a fan of Palantir. It's the same reason I'm not a fan of a lot of companies. You got to be a little careful. Obviously, I mean, I'm again, take this with a grain of salt because I buy stupid small cap penny stocks that are unprofitable. Okay. I don't buy a lot of them. I don't promote them very often. I do talk about some of them. They're sponsored. Some of them have done really well, like Aduro. But let me just explain to you, like, when it comes to these kind of mid-cap companies that people get hyped about, I like the small cap companies I buy because people don't know they exist. There's potential in them because the business can explode, grow, get bought out. That's why I'm buying them. I try not to buy them for as much of the hype that I see in companies like Palantir, because these mid-cap companies can experience insane volatility. I mean, if you were buying it back here, you saw a drop of 80%. That's a lot to stomach, right? And then you've seen a rally back of 200% if you bought the bottoms. But that's not why I care. It's not why I care, right? I should state, I don't understand these businesses very well. I'm not a software guy. I don't understand software as a business, especially at the scale that Palantir is operating it in. But if we can just take a look at their investor relations page, and I just want to show you, like, in a balance sheet, and this is very, like, again, it doesn't mean the company's not going to do well. It doesn't mean the company can't grow and the stock can explode, like, by all metrics. But what I want to show you is things that you have to understand from somebody that operates a business, because again, people tend to overlook this. Can I just find their Q1? I don't want their Q1 results. Give me back to their old quarter. Take me back to 2023. Let's take a look at Q4. Okay, we'll take a look at the earnings release here. And again, I know people would say, oh, they're a bond company, they're making money off cash. That's not what concerns me the most either. What concerns me here is if we scroll down, let me see if I can find it. Is that just like the right here? Okay, so I want you to take a look at kind of like the cost of revenue here, because this is where the breakdown gets really interesting to me, because you can take a look at the growth in the sales and marketing and research and development, right? So a lot of companies, what ends up happening is when their core business isn't growing or part of their software isn't growing, what they'll do is they'll develop new products and they'll market the shit out of those products products, and it'll try and get them to get to market parity. So that way it can justify the revenue, right? Like, so what you end up seeing, right, is a period where revenue growth doesn't match the expenditures, even though revenue is growing. So, I mean, we can see that they went from like a year over year, great, 508 million to 608 million total, like gross profit from 404 million to 499 million. But when you take a look at like sales and marketing here, what you're seeing is like, again, this isn't terrible. This is actually pretty good all in all, but they're pumping a lot of money into research and development on this year. Actually, I want the quarterly. I think the quarterly was a better justifiable cost. Can they show me the quarterly expenditures here? I think it was more just, because what we're seeing is like, I think they were slowing down and then they started increasing this again. But what really always concerns me is like a constant increase, because it went from 359 million again. So, I mean, you take a look at 359 million in research and development to $404 million. It's a pretty dramatic increase year over year, from 702 million in marketing to 744 million in marketing. And their basic, you take a look at about 1.5, is that billion, right? 1.5 billion in revenue to 1.7, 1.8, give or take. Let's just say 1.5 to 1.8. So about 300 million in growth, right? So they're justifying this for sure. I mean, there's a good justification here, but like I said, I just wish the company was moving in the other direction, especially in such a tougher economic circumstance where we would see cutting of sales and marketing, right? Where you start seeing them cut like research and development. Like, I always just find it interesting when you take a look at like the total operating expense continuing to go up on a software company, because they're software. Like, why is the company spending just as much of their net income? Like, their gross profit was 499 million. They are spending almost just as much of their entire income on just basically sales and marketing and research and development as they are on the entirety of their gross profit. And they're just not growing like they were, right? So that's, like I said, I think it's easier if you look at it on macro trends for Palantir. Because like I said, looking at it on a spreadsheet like that is kind of confusing, I'm sure. And I just want to really get you guys to understand this. So, I mean, look at this kind of, we're back to about a 20% growth rate, but we're playing around in this area here where we're well off the highs that we were. And the company is still kind of increasing these expenditures against, they're just not net incoming. Like, why you want to see Palantir explode? Just stop, cut your marketing, cut your expenditures in half. It's a software company. Like, why are they spending the same amount constantly on it? They should just be able to cut everything in half, watch their EPS explode. The stock would go through the freaking ceiling and everyone would be happy. And then it's like, okay, where do we go from here? Like, how do we keep the clients we have happy with like cost effectiveness on our marketing? Like, why are we spending so much? Is our software we own not good enough? Like, I get the growth in the future and all this stuff, but like, they have governments, they have all these stable like clientele. Like, what's the constant evolution that is required? Why is there so much maintenance cost to that? So I'm, like I said, you have to be a little worried about this kind of stuff. It's a growing company, I get it, but they are spending an ungodly amount to keep growing at a slower pace than they were not that long ago, right? I mean, you got to go back to 2021. This company was growing at a 40 to 30% clip, and now we're playing down in the mid-teens to the 20 percentile range. And they're still spending more money than they were back here. It's like, so why are they not seeing a higher conversion rate on that? And, are they losing clients and they're replacing them with, you got to be careful. This is stuff that I don't listen to the earnings call on, but you really want to pay attention to. And again, it's just, I see it with a lot of mid-tier companies where they're kind of doing this little dance. But you look at companies like Shopify and you see how much they play with the numbers. You look at like Constellation Software prints ungodly amounts of money, and all they do is acquire software companies. Like, I couldn't even, this is why I won't buy Constellation Software either, right? Like, I don't understand it. Somebody needs to explain it to me. Who's watching this live stream that listened to Palantir's earnings calls? Please humble me. Explain this to me, because I don't understand it. Look at this. Look at this. This is what a software company should look like. Palantir dropped 80%. This company's been around forever, and it's done nothing but vertical line its entire history in the market. Even like, can I even zoom in? Is there even a practicality to see what happened to this company in 2008? Did it drop like a stupid amount, or did it not? I can't even see. Like, these numbers are insane. I'm just trying to look at the CAD dollar amount. How much did it drop? Like, it barely dropped. It didn't even drop in 2008, 2009. It did nothing. This is what a software company should look like. It should vertical line. And they don't do anything. They just buy software companies and they just maintain clients. This company isn't spending an ungodly amount of money on research and development and like all this other stuff. This is what shareholder return from a software company should look like. So this is why when I say, like, when you look at Palantir, compare it to other software companies and ask yourself, why are these other ones doing better? Like look at Shopify, for example. Like if we go into revenue on macro trends, Shopify is trading at a more favorable value for the growth you're getting because they're growing at double digit, over 20% clip. And they have cut costs and they've done a lot to bring like net income up. And they're only just getting back to net income because they again went through the reality of what happens when you start spending money on warehousing when everybody only cares about growth. But again, they had a lot of controllable things here and they were able to manipulate their balance sheet and bring back earnings per share growth, right? At least a little bit. I mean, you take a look here, we're finally getting back there just slightly, but still, I mean, you get the growth rate with this company and it shows because it's e-commerce, right? Like e-commerce does nothing but grow. So, I mean, it's, I don't know, it's questionable. Just be careful what you're doing. Hi, Kyle. I'm a fan of TD Bank and their reputation. Is it possible for you to explain why there's a negative OCF of minus 65 billion? Thank you. I'd have to take a look. I'm going to have to dig dive. We're going to get the bank earnings coming up. TD is one of the most hated banks on the friggin' planet right now. It's probably a good buying opportunity, give or take. Time will tell. Time will tell. I'll do a deep dive on these and I'll get back to you on some of this. Joseph Carlson talked about SEO and I sort of explained what they do. I know somebody that works for them. I wanted insider information and he kind of laughed at me and said, I'm not going to tell you about their earnings, but a guy that I met somebody that's responsible for their acquisitions. They actually run the numbers and they do the valuations on a lot of the companies they acquire. And that's mostly what they do. They literally just look for software businesses that print money and they buy them privately. Like, and I met a guy once and there's a website that I really, if you want to learn about software companies, go to Empire Flippers. This is an awesome website. And you can just take a look at businesses that are basically privately owned and all kinds of different markets from beauty to business to finance. Like some of these are subscriptions. Some of them are SaaS-based businesses. It's a beautiful thing to look at because it really kind of shows you what these businesses trade for. And the real reality is you can buy businesses on Empire today cheaper than you can buy them by owning something like Constellation Software, because these businesses only trade for like 37 to 40 times monthly revenue, right? So they pay themselves back within 2 or 3 years. So when you have a company like Constellation Software that's fixated on businesses like this that are software oriented and they're private and you can buy them for maybe 30 to 50 times monthly revenue because that's what they do sell for 3 to 5 times or 3 to 5 year returns on the current revenue. And they, who knows, maybe they put somebody in there to try and grow it. Maybe they have some software expertise in certain businesses and they implement new employees to try and drive growth. They probably have expertise behind it, but this is why Constellation Software prints. It's a beautiful business model if you know what you're doing. If you understand the software you're buying and you have the right valuation metrics behind it, you get a full rate of return in 5 years. You can't really even do that with the S&P. Obviously, the S&P has been printing dollars, but most companies do not double in 3 to 5 years. Whereas these companies do, right? You get a full rate of return really quickly. I talked about PayPal earlier on. I do not like PayPal. Let's just take a look at it on macro. PayPal is like, oh, no, let me not mess this up here real quick. 1 sec. Let me pull this up. PayPal revenue on macro. I told you PayPal has reached parity. It's an old business model. The revenue growth is down into the single digits. It's a dinosaur that's fighting for margins. They don't deserve to experience any kind of higher growth. Did my whole thing just crash? I'm like crashing out here, man. My thing is spinning on me. I mean, you take a look at this, right? Like their earnings per share growth hasn't grown since 2021. They're fighting to get this back. The stock has followed roughly the same performance, give or take. Although its stock, I think, is bounced back a little bit, hasn't it? Here, we're finally kind of out of the gutter with this one. Like I said, if you're going to buy it for a swing trade. Don't buy it for a long-term hold. I think a good 3 year hold on this might do pretty well, but long term, it's the growth days are behind this company. There's too much competition. Shopify still looks too expensive. What price actually makes sense? I wouldn't buy Shopify. I think it's too expensive personally as well. Same with Constellation Software. Canadian tech companies like OpenText and all these different companies, they trade at wicked high values because the Canadian economy just doesn't have that many tech companies. And for some reason, we've allowed them to just get overblown because there's so few dollars chasing this. Because if you're in Canada and you're kind of like a bias to the country and you have to invest in tech, you're going to invest where the tech companies exist here. And that's Shopify. There's just not a lot of them, right? So we were able to get to this crazy bubble. This was a bubble. It was massive. I mean, the stock exploded and then it dropped. For Canada's largest company, and at the peak, it was Canada's largest company, it corrected by 80%. You know how horrifying that is? That'll never happen to a company like Apple unless like the absolute fundamentals deteriorate. The reason this tanked was because the speculative market imploded and it had nothing to do with the fundamentals because their revenue growth has been great. their total like growth and everything has been very beautiful, and like they have a lot to work with. E-commerce for them is still growing beautifully, but you have to recognize it's just a garbage, overexpensive company because too few dollars chase it. So I would avoid it. BNS is great if you want income. Hi, Kyle. Yeah, we talked about TD. I'll get into TD. Let's finish up with a few more things. I want to talk a little bit about AI here as well. Some of you were asking me about CNR. It dropped on its earnings. We're talking about, buying aggressively on the pullback, obviously. That's the beautiful thing. Any idea on the Canadian National Railway? One of you guys asked me about this stock as well. And CNR isn't really down that much, on its earnings. It's kind of been flat, give or take here. It dropped maybe a couple percentage points here. Yeah, just under a 5% drop. It recovered a little bit. Again, I wouldn't buy these for much more than a retirement kind of portfolio if you want stability and income down the road. It's a great company. It's got nominal returns. It's nothing crazy. They'll double your money every 10 years for sure. The earnings, if you take a look here, they were down. I mean, the railways, they're Warren Buffett-like stocks. They're not exciting enough for me right now, in my opinion. I'd rather just buy VDY personally, but because again, yeah, I mean, if you take a look here, the revenue growth has been kind of stagnating a little bit. Earnings per share went from 79 cents to 84 cents, which is pretty good, actually. Operating, ratio here. I'm just trying to take a look if there's anything else that's crazy that I missed, because most of the revenue and stuff was just flat. They've done some operational efficiencies like every other company has. I just don't, like I said, it's just a really great company to hold if you want real stability. It kind of reminds me of like Waste Connections, and Waste Connections scares the hell out of me because I also think it's overvalued, but I do like the stock a lot. This company has been just on fire. I would take this over Canadian National Railway. The explosion in the economy right now is driven to such insane growth for these kind of companies, and I guess CN Rail should benefit from that, honestly. But like Waste Management, they just print. The Canadian economy and the U.S. economy, like the way these cities are growing and these waste companies, they might as well be tech companies. I mean, the 5-year return, you've doubled your money here, like, with the dividend and stuff. I mean, you go back to 2012 and the thing's up friggin' 700%. I love these waste management companies. They're kind of interesting. I don't own them, but they're ones to take a look at for sure. I mean, honestly, if you were to build a bucket of like true retirement stocks and you just like, you want a balance of income and growth, whew, baby, Waste Connections, Canadian National Railways, like you just look at these boring infrastructure companies. God, you'll print. You'll print. They're unlike the utility companies that can get wrecked. These waste companies aren't allowed to get wrecked. They can't bankrupt. You can't bankrupt a company that literally deals with, like, it's a monopoly in waste. It's crazy. But before we finish up, I do want to point out the AI insanity ensues. And one of the things that I've been told to do, I've been debating on doing it, because when people like are able to take your voice and they're able to make everything sound like you, all this stuff. I mean, it gets a little bit scary for like authentication purposes, but I just want you to watch this because like these videos, they're doing a good job at trying to make sure TikTok doesn't catch them. They've been trying to like hide them and bury them in a certain way. But these videos, if they weren't so like faded out and like, doing the whole, let's play the algorithm and hide it with Disney backgrounds and stuff, this could be a beautiful scam, right? I mean, just take a listen to this. It's wild, man.
He's the owner of a million audience. Shocked everyone again with his charity work. Watch a clip from his latest interview.
Yes, it's a global issue. A lot of subscribers write to me and ask me to help with financial problems. I couldn't help everyone purely physically, but that's how it was until yesterday. Due to the recent rise of Bitcoin, we have launched a new project through which everyone can get about $10,000. To do this, you need to go to my website, nefinex.com, enter the special.
Isn't this like one of the greatest scams you've ever seen? They've got two.
Mr. Beast, the owner of a million audience, shocked everyone again with his charity work. Watch a clip from his latest interview.
Like, obviously, like anybody with 2 cents in their brain knows this is fake, but like if you were a kid watching this, like, come on, like this is good enough to pass my parent test. Like if my parents couldn't see this was a scam, then like they couldn't recognize this was AI generated. I mean, it's crazy, isn't it? I mean, this is what it's coming to. It's super impressive. It's been coming up on my TikTok feed and I've been saving all of them because I'm like, holy crap. I'm like, this literally is like, if you could just get rid of the fade. Like, I hate that they have to hide it because I love it. I think it's pure genius. And it's great that scammers, they know how to implement this shit quick, right?
Yes, it's a global issue.
Get rid of the fade and stuff, and you wouldn't be able to tell the difference. Like, you think this was legit. It's kind of, it kind of blows my mind. But yeah, I'm in awe of this shit, man. I'm still working and grinding like my ass into the ground because I'm so worried that like, we're going to lose our jobs. There's an inevitability down the road that I'm terrified of. What I'm going to do though, I think what I'm going to do is I'm going to spend the next 3 years just grinding, maybe not grinding as hard as I am now, because fuck, I hate grinding the way I'm grinding now. It's brutal. It's vicious. I'm not going to talk about it because I don't want my personal work to bleed into this YouTube stuff, but I will eventually talk about it. And I'm probably, I don't want to say like buy my course, bro, sort of a thing, but I really want to make like a solidified thing on just like, as somebody that's done this path of like never making huge amounts of money, at least earlier on for most of my career, to like getting to this place of like financial independence and looking at like these different pillars of like family and, just like relationships and like wealth and business and like, coordinating like more than one job at a time. And, just the current way that you get to this kind of place in life earlier, right? Because a lot of people listen to Dave Ramsey and they're like, I just want a good life. So pay your debt off and like, put 15% toward retirement. I'm like, no, fuck that. I'm like, I want to make something for people that want to retire in 10 years, right? Like 10, 15 years. What's the path for that? And what's like the path of least resistance and most likely way of achieving it? And I just like, it's great because I feel like I'm just on the cusp of it. And it's just gonna be wild. And I'm like, holy shit. Like someone explained this to me when I was 23. I implemented it till I was 33 and I'm not even 32 yet. And we're almost there. And I think, I'll kind of pivot from doing the insanity I'm doing now to just maybe life coaching for people that want to like grind themselves into the ground. I was arguing with an accountant about it. This accountant's like, it's not a healthy way to live. He's like, it's not healthy to just focus on frugality and saving and not living. And I'm like, but you can do both. That's the beautiful part of it. Get a job you love. Hell, I was in the entertainment industry for 10 years before I got to where I am now, right? So, I mean, I think you can find a balance that I think is fun. Yeah, wow, it's impressive. Again, I'm not like uber rich. I'm not like me, Kevin Rich. I'm just talking about having a paid for mortgage, get over $500,000 in the bank, and you're set. Like you're pretty much there, right? Like if you just make 5 or 10% on $500,000, your basic needs are met. That's why I always laugh when people are like, oh, you need millions of dollars to retire. It's like, you really don't. I mean, like just look, it's your cost of living. I'm like, even though we live in Toronto, if we just pay this mortgage off, like our cost of living is not that much. Like we could get by on 25, 30 grand a year. Like that would pay the roof over our head, basic utility crap and food. And that's like nice food. And we're good. I mean, like that sets you up. And then, we work part-time. You go work to pay for travel and whatever else, call it a day. Not that I'm like fully going to retire. I'm just saying like, it's a lot easier than I think people make it out to be when it comes to like this grand idea of I need $3 million and I've got to make 4% on it in the S&P or something like that. It's like, no, just make 3 or 4% on $500,000, $1 million. You get between that $500,000 point, you're good. I mean, you're really in a good situation, right? Did you tell him that his job is the easiest to lose to AI? Now, I'm not gonna be like, I was rude to the guy, but like this guy just, I get it. People like, you want a life kind of balance, but I don't like life balance. I've never had balance in my life. I've been self-employed. And again, I think, it depends on, I can only talk about it from my perspective, which is why I think it's fun to maybe talk about like how I've done this thing. Because like I said, I'm a workaholic, I like challenging myself. I like trying to live as frugally, but, still live, but live frugally as possible. I don't go to Starbucks. I drive a shitty beater car. Like to look at every facet of a life like this and kind of, for newer people to implement that, I think is so valuable. Because people just go out and lease cars and someone convinces them that leasing a car is better than buying a used car. What? I like listening to Grant Cardone convince somebody to get a lease for $1,000 a month. It's like, are you nuts? It's like just stupid crap like that. I just find it interesting, right? I feel like you could do little docu-series on each little aspect of frugality and path to financial independence, not waiting until you're in your 60s to do it, right? Not that, like I said, it's not a life for everybody. It's not something you have to do at all. It's just something that is just unique to me that I think is fascinating as fuck. Especially with my wife, like to find a fiance that's kind of in a similar mindset. Like I don't think she cares as much to do it to the level I'm doing it to, but she gets the frugality and the saving, and she's put herself in a great position being a normal person that just has a normal job, doesn't want to try and, work 3 jobs at once or whatever. And she's done very well. HTA, ETF, Kyle, peep it. I will do. And we will talk about it in a later video. Could you explain how you would retire on 500K? It's not that you need to retire on 500K. It's just, to me, 500K resolves a lot of issues in your life, right? Because again, like if you just invested that 500K at a dividend yield of 4%, which I think is relatively modest. Ideally, I want to play in the 3% range. But let me just do the math on it, right? I always say 700,000, 800,000 is where I would rather be. But again, I just think 500K gets you to 20,000 a year. And you can do a lot of that through tax advantage accounts and corporations and stuff like that. So, I mean, again, you make 4 to 5% on $500,000. That's cash flow. There you go. You got 25K. My total cost to carry my property, basically without the mortgage, I think is about 12 to 1400 a month. I'm gonna have to run the math. I think it's around 12 to 1400, but let's just lowball it and say 1200. So I mean, to float this property is going to cost me about 15 grand a year. So okay, 15 grand a year, boom, that's paid for, out of that 20K. And now I still have about, I have over 5 grand left. I have 5 to 10,000 left. That covers groceries, right? So I mean, yeah, I mean, if you're probably not spending more than 500 to 1,000 a month on groceries, right? So there you go. You got a roof over your head and food on the table. Is that not financial freedom? Isn't that like FU money? That means if you don't like your job, you can give a guy the middle finger and tell him to fuck off. Isn't that what everybody wants in life? Like, you don't need $1 million to achieve that. You just got to find a living standard that makes you happy, and then just find the amount of capital required to make sure that basic living standard is always covered. And then anything after that is gravy. And you should be able to achieve that in your 30s if you start in your 20s, which is why I just don't understand the whole school thing, right? But because it's like, everyone pushes you to go to school, and the whole point is to make more money later on in life. But people go to school for 5 or 10 years. They wait till they're in their mid-20s. A lot of them are in debt. I'm like, you could have just went and got a regular job, lived with your buddies, or lived with your parents for an extra several years. Like, if you can get away with it, and just live cheaply as possible with friends or parents. Sure, you might have to pay them something, but it's not going to cost you $3,000 or $4,000 a month like it costs for rent here in Toronto. And then just bank. And by the time you hit 30, you do that for a decade, like, you'll be in a super awesome position. Again, it doesn't take fucking making 6 figures a year to do it either. What about kids and expenses? Yeah, you have to plan for that, right? Unless you're one of those people that went out and partied and you knocked a chick up unplanned, and you listen to people like, who's the guy from Fox that went and interviewed Putin? That guy was like, oh, just have kids. Don't even think about it. Just live life freely. I'm like, are you an idiot? A kid's going to cost you like 300 grand by the time they're done high school. Like, this day and age, you can't just get knocked up. If you get knocked up, bro, you better have the best parents and the best people around to help you out. Because, yeah, who cares? Like, if we want to have kids in the next 2 years, we're basically going to be a place of financial stability. That's what my parents did, right? That's what my parents taught me. My parents had us at 33 years old, 32 or 33, and they paid their mortgage off. They decided to pay their debts before having kids. That's the responsible thing to do, right? I mean, there's nothing saying you can't have kids, but damn well do it responsibly, because they'll keep you broke. They'll definitely stop you from retiring. You'll have to work your whole life for your kids. Again, not saying there's anything wrong with that. It's just this day and age, it's scary. It's way scarier than it was if our parents got knocked up. If my parents got knocked up when they were 20, they'd make it work. You go out and get a regular job, you'd still buy a house. A lot of people had kids back then and bought vacation homes, for Christ's sakes, on 2 incomes that were normal jobs. Why didn't I start earlier? I know, planting a tree, right? You always wish you started 10 years ago, but the next best day is today to start planting that tree. Serving the sentence with my parents right now. I love them, though. Yeah, so good for you, man. And that's what I'm going to call the book, the 10-year prison sentence. That's what the book, or my buy my course, bro, will be called, because that's what you got to do, man. You got to give it up. I really, really like. This is one guy that I have a lot of respect for. Who's the? He's a Tesla pumper, but I got a lot of respect for him because of his background. His wife has cancer. I feel real bad for the guy. I'm really trying to find his channel, and I'll leave you with this because I think the guy's an inspiration and a half. Do you guys know who I'm talking about? He's this Asian guy, and he's just a Tesla pumper. His whole channel is only about Tesla. Let me just see if I can find it quick. I really want to know what his name is because I think I subscribed to him. Anyways, just to abbreviate to this guy, basically, like, if you watched him enough, he talked about his past once, and he grew up living in an apartment that was just absolute garbage. And like, he said for the first 10 years of his life, like, he was living in this shitty apartment where, like, in winter, the wind was like blowing through and he had to like tape plastic bags up against the window to stop the draft. And he woke up one morning, there's like a cockroach sitting on his toothbrush and stuff. And I'm like, that is commendable. I mean, like, that is respect. I know a lot of people come for money, and some of them are respectable. I get it, but there's just nothing like coming from pure trash and just putting that 10-year prison sentence in of living frugally and getting to a point of like success that is just so commendable and respectable. Because I feel like a lot of us had to do that. Like, my parents were never rich. Like, we were definitely not upper middle class kind of, people. My mom was a sheep farmer. I'm like, and I think it's fascinating because I feel like it gives everybody like a way of escaping, right? Like, it's a real, it's a path. You just see that if other people can do it, I can do it, right? You don't have to come from like a Trump-like fucking background. Would need growth stocks first in TFSA to achieve 500K, and after that convert it into ETFs and dividend stocks. Yeah, but you get a huge dividend tax break on Canadian dividend stocks either way. So even if you have to buy them outside of a Canadian tax advantage account, you're not paying full tax on it. So I mean, like if you maxed your TFSA and then you had to put like an extra like $300,000, you get $200,000 between an RSP and a TFSA over a 10-year period. Like you're in a good place, because honestly, you're not going to pay huge tax on income stocks as it is. If you have kids, you'll be working the rest of your life. Well, yeah, but again, you're working for your kids. I get it. Like I think that's commendable as well. There's nothing wrong with that. It's just making sure today you're stable enough to give them a good life. That's what scares me, because again, you could have kids and have nothing, and you're not going to give them the best life because you're going to be too busy working to just put food on the table. I need SoFi to moon so I can retire. Fingers crossed, earnings next week, folks. I'm going to stop rambling here. I feel like you guys are getting tired of me. Sasha Yashin is the guy. Is it Sasha Yashin? Is that the dude? I don't think that's what his channel's called, though, is it? Sasha Yashin. No, I don't. Who is this guy? Who are you talking about here? Sasha Yashin. I don't know. We're going down a vicious path here, folks, and me rambling. So stay cool, stay awesome, and as always, I look forward to catching you in the next one, folks. Let's go. Let's get it, baby. Earnings next week.